The market
Thank you for having me.
Ending the day in the positive at 3,998, but as I'm saying, it's below the 4,000 mark that we'd seen it trading at in the last week. Marginal gains, but a bit of a retreat. So it's a bit of a mixed picture, I'd say.
Yes, it is. The market is generally flat, and we don't expect it to change much in the absence of any some good news in particular to drive up the market and drive in local investors into it.
All right, obviously what we have seen today is a story of foreign buying, particularly the blue chips that are foreign favorites, Safraicom, Equity and KCB. For the other stocks, what's needed to lift their profile, do you think?
Well, I think it's really an issue of liquidity. There is a lot of interest in some counters, but absolutely no liquidity. So we end up with those investors willing to get into the stocks, not actually being able to get some of these stocks. And in so doing, what happens many times that they become either overvalued or undervalued purely based on the liquidity aspect. That aside, there are also issues of the actual place where these stocks are actually located. Now, with most of the foreign investors, they are looking into investments that offer some regional diversity, particularly after the 2007-2008 issues that came up. So the regional play is absolutely critical for any investor, purely to diversify their geographical risk.
Okay, and that would explain the activity in Equity Bank and also KCB with a lot of their East African regional expansion plans. But we're seeing these banks coming in at 26 shillings 50, 27 for Equity, 26, 26.50 for KCB. The greatest argument is that these are rich stocks, you know. The PEs are quite high for some of these banks. The foreigners can afford it, but what about the locals coming in?
Yes, some of them are a bit rich, though, again, like I mentioned, just briefly in touching, the liquidity really enables the stock movement. So the foreigners could get in and out, the local people could also get in and out. It's really one of the key issues of any particular investor. So again, what's also driving these local stocks, the banks in particular, is the very vigorous changes in regulations that we've had. Just this week, we had the central bank come in and give a license to our second credit reference bureau. So we've seen the interest in the banks once again pick up, led by Equity and KCB.
Talk to us about Kenya Airways. We've seen the share price surge to 3 shillings 25 in today's session, gaining as much as 9% during the course of the day. Obviously, this is on the back of news of KQ signing a deal with Boeing, but we were told that KQ is under pressure with the high oil price and competition.
Yes, the high oil price, really, there's no escaping that globally. So what KQ have done is they've taken on a very good hedging approach this particular year, and they've also tried to pass on some of these costs in terms of surcharges to their clients. So KQ is trying to do their part in terms of keeping in any profitability they can in regard to the airline hedging costs, particularly the fuel issue.
Other gainers in today's market were CFC, and we know that CFC is intending to offer 100% mortgage financing. So obviously they're intent on growing their loan book. But what about the threats of inflation and interest rates rising?
Those are key particular issues. Higher inflation, higher interest rates, unless their clients are able to lock in some of that issue, then for CFC, it will be an issue of wide exposure. For a client getting into that, 100% mortgage financing in such a high interest environment would not really be ideal. I don't think many advisors would inform their clients to get into that kind of arrangement.
Talk to us about the story regarding City Trust. That's also been a good performer today.
Yes, City Trust has been a good performer today, though it's a very illiquid share. Today only moved about 200 stocks, so there's really not much news in it. It's just that it's a lowly liquid stock.
And finally, let's just talk about broader issues around regulation and risk management within Kenya's markets. The Capital Market Authority also reiterating that they're introducing higher capital adequacy ratios for investment banks and stock brokerages. But the investment banks are bulking, and some of them are also threatening to downgrade their status. What are their concerns? What's the problem?
Yeah, for the regulators, the CMA is keen on pushing the Basel regulations, the Basel II regulation, capital adequacy regulations. But unfortunately, they have not given the stockbrokers, the investment banks, enough time to raise up the capital. That's the issue that the players in that particular sector have, that they need more time to ramp up their capitalization so as to meet whatever requirements that the CMA now wants to bring in. That aside, the issue of possibly reverting back into stock brokerage houses, pure stock brokerage houses, would be a bit unfortunate in terms of the CMA, because the CMA is really trying to increase the market performance in terms of liquidity, in terms of different types of services available. So with fewer investment banks, then it would really be an unfortunate scenario, because the products available in the market would come down, because the stockbrokers are only limited to a few particular services as opposed to investment banks. So that would be an unfortunate move should that threat be carried out.